Hey, lovely. I thought I'd just jump in and share 5 quick tips in regards to share investing. And then later in the week, I was thinking Tuesday night, I'm going to pop in and do a live video and talk about how you actually get started, what shares that you might be interested in picking. And we can either go through it together live when I pop in at that time, or you can watch it later. But first off, I just want to start by giving you 5 quick lessons. So the first one is, what is share investing and how do you make money from it? So, basically as a shareholder, you're a part owner in a company. You own a very small piece of a big company and you have pretty much bugger all power to it. You collect the profits, but you aren't involved in the management day-to-day running of the business. So if you bought some Commonwealth Bank shares or some Telstra shares, management aren't going to call you, Heather, and say, oh, what do you think about this strategy? Should we do this? There's none of that. You just collect your dividends and make a profit from any increase in the share price. So basically, with a company that you invest in on the share market, you've got a company that earns income, so it creates income, and it has expenses. So the income less the expenses is what's left over, which is the profit. And management of the company then decide of that profit how much it's going to distribute out to shareholders and how much it's going to keep within the company so it can reinvest. So when it reinvests, it might buy some land or some plant and equipment, or might buy some extra staff and resources to try and increase profitability for the shareholders. So if we take, for instance, a company, and in 2018, it had a $1 million profit. So it was operating $1 million profit. So the management decided of that $1 million, they're going to pay half out to the shareholders. So 500,000 goes out to the shareholders and they all share in that as a dividend. And then the other 500,000, they're going to reinvest back in the company with the view of making higher profits. And so then in the next year or the next year, say 2020, their profits were $1.4 million. So a couple of years ago, they were 1 million and they've increased to $1.4 million. So the shareholder benefits in 2 ways. One, rather than having a share of $1 million, they've got a share of $1.4 million. And then the other way they make money is, if you think of it, when you were a shareholder and bought the shares back in 2018 and there was $1 million profit, you paid a certain price for the share. But do you think that most investors or all investors 2 years later down the track, or they're looking at a company that's paying $1.4 million in profit, do you think that share price is going to be worth more? Yeah, of course it is, absolutely. So as a shareholder, there's 2 ways you can make money. One from a share in the dividends or the profit share, and then the other one is in regards to the share price going up because the company is more profitable. There are other reasons that push share prices up, and we'll go through them later through our game. But for all intents and purposes, most of the fundamental change in the share price is because profitability has increased. So that's lesson number 1. Lesson number 2 I want to share with you is there's a difference between investors. And basically, so I'm going to share my screen so you can see here. I've put together a couple of things. Oh, one of the first things that I should say about this whole game and everything that I share with you is very much general information, financial education and coaching. I'm not giving you investment advice. So that's just a little slide there from the legal department. So very, very important slide, obviously. So yeah, that's that one there. So, that's part of what is a share. So the next thing that I want to talk about is the difference between traders or day traders and investors. So a day trader or a trader, they're pretty much making money by going in and buying shares and then selling. So, they might be extreme enough to buy shares in the morning, sell them in the afternoon. So they're just buying low and selling high if it's going the right way for them. But that's basically what they're doing. So they're trading in and out. They don't really have a massive time frame for holding the shares, as opposed to investors. So investors buy some shares, and as long as the investment's going okay and the company's going okay as expected, they would hold those shares for a much longer period of time, ideally 7+ years. So it's one of those, very much you buy the share, you invest in it, and you stay invested for the long term. So with this game, it's only a 15-week game, so very conducive to traders, like making money buying and selling over that 15-week period. But for intents purposes, for what I want to teach you about share investing, it's very much focused on investors. So I'm not expecting any of us to shoot the lights out and perhaps win the prize money that the ASX is offering. But I do think that we should have a bit of healthy competition between us girls in here, and we'll have a prize for the person that makes the most money from their share portfolio within our small group. And so if you've got any suggestions of what a good fun prize might be, perhaps just pop them in the comments box. So that was the second lesson that I want to share with you in regards to traders versus investors. So what was the next lesson that I wanted to say? Okay, yeah, price and value. So this is a really important one as well. So there's a difference between the company's price, which you'll see when you go in and log in, and you can see all of the different share prices. That's their price. It's very different to a company's value. So you could have two shares that are the same price trading on the stock exchange, but very different value around them. And I'm going to use some fruit from my banana bowl. Almost embarrassing because this one's on the way to being a banana cake. But for all intents and purposes, it'll demonstrate my the point I want to get across. So you've got two bananas. One is worth $2 and this one is worth $1. Okay, so all you can see on the stock exchange is a banana worth $2, a banana worth $1. When you actually have a look there, which banana do you think is going to be more valuable? The $1 banana or the $2 banana? Yes, it's more expensive, but it's healthy, it's bigger. Who says size doesn't matter? And it's just going to be more appealing for more people to buy and eat this banana as opposed to this crusty little nugget. So even though this one's cheaper, doesn't mean it's more valuable than this one. So hopefully that's where I was going with price versus value. So you could even have two shares that were the same price. So you could have two $10 shares. Company A has a $10 share and its market cap is $1 billion, but there's 10 million shares. Or you could have another company that's worth the same amount of money, but it's $1 billion, but there's like 700 million shares. So when you break that down, the value is very different in terms of which company is worth more than the other company. So I'm going to go into that in a lot more detail, but I just wanted to bring that up as one of my top 5 points, because I don't want you to be, when you're picking your shares, to actually say, well, I'm going to buy these shares because they're valued at $5 or they're priced at $5, as opposed to, well, I'm not going to buy these shares because their value, you know, their price on the stock exchange is $100, and it's going to be harder for that to grow. So by looking at the price and not looking at the context of other financial information, you can really trip up. So when you're looking to select your shares, don't be too focused on the price of them. It's more about the value in terms of the profitability. So, you know, my example before about the company that's got $1 million profit versus a company that's got $1.4 million profit. If they're worth the same share price, obviously one's actually more valuable than the other, even though their share price is the same. So that was the next point that I wanted to get across for you. And the next one is around diversification. So I'm just going to screen share again. Here we go. Oh, bear with me. Okay, so that's that one. So going down. Oh, whoopsie doops. Okay, so price versus value. Traders focus on price, investors focus on value. We're going to be investors, so we're going to be focused on value. Sector allocation. I'm going to come back to that one. Yep, so we're going to do this one. So diversification is the next point that I wanted to share in terms of a concept for you. So you've got 50 grand each, so it'd be worthwhile to have some diversification, and if you were doing it in real life, you'd want a lot more diversification. But you could perhaps look at saying, well, I'm going to invest in 10 shares and I'm going to invest 5,000 in each of those. I wouldn't pick more than 10 shares. It's just too many for you to track and follow. So I would start anywhere between 5 shares to 10 shares if you're going to go and pick individual shares. The other thing that you can do is invest in an exchange traded fund. Now, I've actually got 2 logins and usernames for the ASX game. One is Karen Ely and one's Kate E. So I'm going to actually run 2 different portfolios, and I'm going to do that to show you the difference between the 2. So in one of my portfolios, I'm going to have between 5 and 10 shares worth this much, up to the value of 50 grand. And in the other portfolio that I run for Kate E, I'm actually going to use a couple of exchange traded funds. So an exchange traded fund is basically a fund manager that has listed itself on the stock exchange as 1 share, but it's actually doing the investing for you. So it's going and picking between 30 to 50, could be 100 different shares in there. So you're getting a lot of diversification, but you're actually only buying 1 share. Now, I'm going to share with you, this is a big way as to how I invest in shares these days. So many years ago, I would do this option here where I'd have lots of different shares and I'd monitor them. And that was great before kids, and I had lots more time and interest in it. But now I choose the easier option. It's a little bit lazy, I admit. Yes, I'm a little bit lazy. So Kate E is going that lazy option and using exchange traded funds. So I'll share more detail about that as we go through lessons in the game. But it's really about just making sure you've got some diversification. So I wouldn't just go and buy 1 share and spend 50 grand on it. You might want to have 2 or 3 and just have a little bit of diversification there, so you can see how the shares go up and down in value. So on the stock exchange, when you go in there and have a look at the list, there's actually 2,000 different shares that you can invest in. I believe with the game though, because I've never played this game myself, so I'll be learning, not so much learning about shares, but learning about how to play the game exactly the same as you are. But on the ASX, there's 2,000 different shares. And so one way to categorize them is to actually break them down into sectors. And we have these really annoying, terms and jargon in our financial services industry, which really pisses me off. But anyway, so I'm going to explain. A sector is basically just a way of categorizing those 2,000 shares that sit on the stock exchange. And they categorize them down into the industry that their company operates on. So you can see here we've got financials, materials, real estate, industrials, consumer staples, healthcare, consumer discretionary, energy, telecommunications, utilities, and IT. And you can see here, this is the top 200 stocks on the ASX. Look at how much is in the financials. So, pretty much there's more than half of our share market in the top 200 shares is financials, and then the other 17% is resources. So we're really heavy, our stock exchange is really heavy focused on financials and resources. But then there's lots of other great sectors or industries that you can invest in here. So one way, if you're looking to diversify your portfolio, it might be going and breaking them down into the different industries and picking a couple of sectors or industries that you think might do well over the next 15 weeks. And that could be IT, it could be telecommunications like your Telstra, your TPG, those types of companies. It could be in healthcare, especially given the current climate, and at the time of this filming, it's COVID. So so that's another way where you can actually have a look and break down the, help you decide onto which shares that you want to invest. So diversification, sector allocations, price versus value. We're traders or investors. In our case, we want to be investors. And basically, I just talked about how investors make money from shares. So hope this has been useful. As I said, I'm going to pop in, I'll put some more details in there, but I'm going to go live and do some question and answers and actually walk you through the platform of the ASX platform that you've got and show you exactly how you can buy the shares. So in the meantime, you can go ahead and do a little bit of research, or you can just wait for me and we'll do it together. So just want to thank you again for joining the game, and I'm looking forward to hanging out with you live soon. Okay, take care, ladies. Bye.